What's up guys, Bryan Lebo here with your September Las Vegas market update video. If for some reason you're wondering why you're watching this video, allow me to present this. On Tuesday, Nevada Current ran this article illustrating how and why Las Vegas and Henderson home values will lose 7.8% of their value over the next 10 months. Okay, now that's one opinion. Well, I wake up the next day and see this article in the Review Journal stating that Las Vegas home prices reach new record in August. So which one is it? Or are both of them correct? Let's go ahead and find out. Okay, first up are last month's sales. Last month, we only sold 2,628 homes. This was a huge 10% drop from last year when we sold almost 3,000 homes. This is very strange behavior since typically August sales are equal to or above July sales. We actually dropped 13% from July sales this year. Certainly not a good sign and actually really surprising. Now let's see how that affected pricing. Now typically when sales are down 10%, that negatively affects home values. But not in the year 2020 because anything goes. As you can see on the screen now, we managed to jump another $4,000 last month to $332,000 for a new all-time record. This now puts us up 9% over the same time last year. Go figure. Okay, now let's check out the inventory levels. On the screen now, you can see that we ended the month up 1% at just under 5,000 homes on the market. Now to add some insight, this puts us up almost 18% since the week we went into quarantine back in March. All right, next, let's check out our newest metric, which is housing absorption. On the screen now, you can see saturation by price range. Let's start with the low end. Under $250,000, you can see that we're now up to 57% of homes on the market under contract. That's up 10% from where we first came out of quarantine in June. Next is 250 to 500. We've gone from 39% all the way up to 52%. Next is 500 to 750, where we've gone from 30% saturation all the way up to 40. Now let's check out the luxury market. From 750 to 1 million, we've gone from 25% to just 33%. But here's where things just get nuts. Look at 1 million to 1.5 million. We went from only 15% all the way up to 33% saturation. We've more than doubled the saturation level of this market. Finally, we have the ultra luxury market above 1.5 million. Even here, you can see a 6% jump from 11% to 17%. This saturation metric really illustrates consumer confidence. So what do all these numbers mean exactly? Well, across the board, you can see that whatever is available is being picked up. While our available inventory levels are pretty stable, you can clearly see that everything listed seems to be instantly absorbed. The fact that sales overall were down, but inventory remained consistent, illustrates that not many homes were ultimately listed for sale last month. Now, keep in mind that we're looking at all this from a macro perspective, meaning while these numbers give us an accurate depiction of the overall market, your neighborhood may be acting very different. I've seen some neighborhoods with 8 homes for sale and not even one of them are under contract. On the other hand, I've seen $800,000 neighborhoods where the majority of homes are actually under contract. So keep in mind that different areas of town and different price points are going to respond very differently. Now, getting back to the beginning of this video, honestly, I think that both articles are somewhat actually accurate. While I've seen the market cool off tremendously since school started, it's very difficult to ignore some of the prices of recent sales. Most of my surprise tends to be based on absurdly high sales prices for some of these newer homes out there. If it's a new home, there's seemingly no limit to what people are willing to pay for that new and especially modern home. Now, on the other hand, I'm starting to see a bunch of, mediocre homes say built in the mid 2000s, that are almost being given away. As more and more homes are starting to be remodeled and now they're being resold, I've never seen such a disparity between home values. I'm now regularly seeing price gaps for the exact same home model, like model match, varying as much as 30% in some of these neighborhoods. So while the market has been on fire, we're naturally starting to reach the slowdown period. If you've been watching my videos, you know that we're about 2 months away from the ultimate litmus test. If you've been to the Strip lately, let me just tell you, it's not the Strip we once knew. I was there for the first time the other night, and let me confirm the rumors. It's a different kind of crowd. While Aria typically caters to like the business type crowd, it looked more like downtown Fremont. Without getting too deep into it, the Strip really just isn't a great place to visit right now. I hate to say it, guys, but between the fights, the unreported crimes, and just the overall optics, I can't see these hotels and businesses really making much money for the rest of this year. Now, we just lost the National Finals Rodeo, which is a huge economic stimulus for us. Next month, we have the maturity of mortgage forbearances, and then right after that is the election. So while the market has been on fire and everyone's fired up about cheap interest rates, I'm also very concerned about our housing market. I think we have about 2 more months before those major cracks start to form in our market. I think there's going to be a really quick turnaround from some of these articles currently hyping up our housing market to articles like the first one I showed you at the beginning of the show, which illustrate a market in peril. So, like I've been saying, it's all about risk versus reward. I think blindly purchasing right now is highly risky behavior. Some neighborhoods are ripe for a massive collapse. They were overpriced in a pseudo-overpriced market. Meanwhile, other neighborhoods are much more insulated since they never really overappreciated to begin with. So if you're planning on selling, you probably likely already missed the boat a little bit, but make sure you give me a call and let's just get it listed ASAP. Now, if you're looking to purchase, I have to emphasize patience. I don't think these rates are going to go up anytime soon, so be less fearful of losing out on that generous rate and be a little bit more fearful about overpaying for some of these newer properties. Well, that's it for this month, guys. Thank you again for watching. Please be sure to smash that subscribe button, and I'll see you guys all next month.